Hello everyone. In this video, I will practice with you some cash transactions. We will do the debit and credit entries for the transaction. So let's dig in. In this exercise, we have 5 transactions and they all involve cash. So let's look at the first one. Paid cash for rent expense. So cash is being paid for the rent expense. Remember that cash is an asset and the assets increase on the debit side and they decrease on the credit side. Because we are paying cash, so cash is decreasing. So that means that for cash we have to do a credit entry. What about rent expense? Rent expense the entries they increase on the debit side. So the expenses increase on the debit side and decrease on the credit side. And here we are increasing the rent expense. So the expense will have a debit entry. Whenever we do the debit and credit entries in the accounting system, debit entry is always entered first. So because expense has a debit entry, we will do the expense debit and cash credit. So this will be our entry. Don't worry about the amounts. I'm just going to use the X for the amounts. Now they're also asking that what will be the effect on stockholder equity, meaning which account will affect the stockholder equity. In the first transaction, cash or rent expense. So we know that cash is an asset account, right? So what about the rent expense? What do expenses do to stockholder equity? The expense reduces stockholder equity. So the expense account is reducing stockholder equity. Okay. Let's look at the second one. It says paid cash dividends. Paid cash dividends. So again, our cash is being reduced. It's getting decreased because we are paying. And what the dividends are being paid. And whenever we pay dividends, because the dividends they reduce the stockholder equity, and that's why the dividends are debited, because all the decreases in stockholder equity are entered on the debit side, all the increases in stockholder equity are entered on the credit side, and dividends they reduce the stockholder equity, so it's a debit entry. So we will enter debits first. We will do dividends first because it's a debit entry and it's paid by cash, so cash is reduced. Okay, and as I've already told you that dividends reduce stockholder equity. Let's look at the third one. Received cash for fees earned. Now, two accounts involved are cash and income. Fees earned means it's an income account. So income increases on the credit side. Okay, So income is increased by credit, and here we are receiving a cash which is also being increased, but cash increase on the debit side. So which entry will go first? Cash entry will go first. Cash is getting up. It's a debit entry. We are receiving cash and we earned fees, which is also increasing, but the increases in fees or in income or any of the income account goes on the credit side. Okay, now to answer the second part of the question, that what will affect stockholder equity, it's definitely the fees earned, that increases the stockholder equity. So fees account will increase the stockholder equity. Number D is issued capital stock for cash. Issued capital stock for cash. Now here we are receiving cash because we are giving the shares of our company to investors. So the investment in the company is increasing. For investment, for the shareholder investment, the account usually used is paid in capital. And that's also the account that is under stockholder equity. So because the investment is increasing, we will increase the paid in capital account, and it increases on the credit side. Okay, and our cash is also increasing because we are receiving money, we are receiving funds, and cash increases on the debit side. And because we do the debit entries first, so we will enter cash first and we will put paid in capital increase on the credit side. Okay, and which is the stockholder equity account? It's the paid in capital account. It increases the stockholder equity. Our last one is paid creditors. Now, what do you think? Which element of the balance sheet will the creditors go on? The creditors will go on liability section. Usually the account is called accounts payable and then it's named by the creditor. For each creditor there is a separate account, right? So initially, for let's say we bought a computer on credit, we haven't paid the money yet. So our asset, computer, the value of asset went up, and we also increased our liability at the time we made the purchase. So at that time when we made the purchase, we increased our liability because the liability increased on credit side and decrease on debit side. So initially when we purchased the computer, we increased our liability. Okay, we entered the money name, but now we are paying off that liability. So we are going to pay that off. So we will decrease our liability, right? We will decrease our liability, and the liability decrease on debit side. Okay, the liability decrease on the debit side, and our asset is also increasing because we are paying by cash. So our cash is going down, but whenever the cash decreases, the decrease is on the credit side. The accounts payable decrease by the debit side. So we will do the debit entry first. We will say accounts payable. That's a debit entry. We are paying off, so it's reducing, and we are paying off by cash. So our cash is also reducing. Okay. And what's the effect of this transaction on stockholder equity? Do you think there is any effect on stockholder equity? See which accounts are involved. Cash, which is an asset account. Accounts payable, which is a liability account. So there is no effect on stockholder equity. Okay. hope this helps you understand a little bit of how to enter debits and credits for the transactions.